Hello, fellow traders. 'Tis I, the Rumpled One. This video I'm really making for Forexmospherian over on Trade to Win, because we've been going back and forth. I'm learning his method of linear regression. So I thought, I should just make a video and I can point out some things, ask him some things, and maybe it'll get across a little bit better than just posting charts and text. So F, what I'm trying to do is basically code your system in the indicator. Basically, I was trying to do it with this one little indicator here, where I divided the your triggers up, because you basically I deciphered that there was three things I needed to look at. But then, through our post back and forth, it looks like that might not be the case. There might be more things. And as you can see, my chart basically has your red, yellow, green lines, linear regression, and the three white lines, the thick white, and then the two dash dotted lines. So anyway, moving forward, as you can see, I've got a bunch of different sub windows here. Now we've got the red, yellow, green linear regression history here. So red, yellow, green. Green on top, red on the bottom, yellow in the middle. That's when you said that indicates a sell, and you can see that right here. So when that first happens, that's you get that first red box. And so each one of these boxes corresponds to the candle. Um, so you wrote something, and so let's just clarify. The question would be, if you get a red box, do you wait for it to close and then enter at the beginning? Because it doesn't seem like there's very much oscillation. We can scroll back here, and you can see usually there's not too much oscillation. And you can see here there was a nice long opportunity, but because this was in a wait, well, we would have maybe had to look at something else, which I'll get to a little bit later. So that's the first sub window. Then the three white linear regressions, which once again, when these two cross above, the two dash dotted ones cross above this one, that's when you have an indication of that's a buy trigger. But I think the way you had explained it was, if the three whites are under price, as they are here, that's when you want to go long. Okay, so right here, if the three whites are under the price, which what we have here is the three whites, you can see once again it lit up as a buy. And then you can see if it's over the price, the three whites are actually over the price, it lights up as a sell. So those are the first two. Now, you had mentioned if you get all of the linear regression lines, all 9, and you can see, even though I only show 6, I've got my gauge here that shows all 9 of the linear regression lines that you use on your chart. Well, if they're all under price, then, or if price is under all of them, then you have what you called a good buy, and if it's the other way, you'd have a good sell. And I guess right here there was some good sells, but that doesn't seem to happen that often, so I guess that's one of the things, you just take it as it comes. And hopefully I'm understanding what you've written, because when you write it out, you saw in that one post I extracted some of the lines, and that's why I coded up so many indicators. So if we can just get all these pieces right, I'll be able to then build a nice trigger indicator where instead of you having to look at multiple pairs and multiple charts, we can just build you a nice dashboard with these displays, and you can see where the opportunity is, and then you can go look at those particular charts. And then in that one post, you talked about the white, the red, and the yellow. And if I have this right, if the white is above the red and the yellow, that's a sell. So right here, the white being above the red and the yellow indicated a sell. And so finally, if you even entered way back here, you finally got your payoff at the end of the day. But something that I posted, but I want to go over it in the video. You see right here, you have conflicting signals. You've got this one indicating a buy, but these two indicating a sell. So what I'm thinking is 2 overrides 1. So this case you take the sell, but you see right here, now you've got a green and a green. Now you've got a green and a green. So these two greens override the red, and once again, 20/20 hindsight, but in the heat of the battle, it looks like if you've got 2 or more of these, in agreement, that's when you can take a trade. Now, that's just what I see. You'll have to let me know your way of thinking. And finally, if you can notice these, I've got the times. You got a blue line for the beginning, and you've got the magenta line for the midpoint, which would either be at the hour or half hour, and then you've got this faint red line here ending the trading period. So you see I wrote this time to trade indicator. So when it's blue, that's the time to trade. When it's yellow, I guess you sit on your hands, or or maybe you're just watching the price action during that time. Which, by the way, I'm curious how you define price action. I don't know if I posted it in a thread, but maybe I will, because I've defined it, because most traders talk about time or price action, but they don't take the time to actually define it in a way that another trader can understand it and use it. They make it sound like something mystical, when to me it's pretty cut and pretty cut and dried. It's simple. And I define the price action as a candle is either going to break out of the previous candle's high or low, or both, or it's not. And that's pretty much price action. So you can see here, take this candle, it broke out of that one's high. This one broke out of that one's high. This one broke out of that one's high. And then you can see here, this one almost broke out of low, but this one didn't break out, and this one didn't break out of the previous. And that's price action. It's the same on all time frames. So F, those are the questions that I have for now. Like I said, putting splitting these apart. I know you understand this and you see the whole, and you probably see it as a whole, but me, I've got to learn it piece by piece so I can build it. And not just to build the indicator, but to understand it. See, if I can build the indicator, that means I understand it. So, and once again, you can see here with this price structure, it was indicating a short. But it seems to me, what you want to do is, if I understand you, you say sometimes you take these scalps, these the 3 white linear regression scalps, and I guess when you have all this congestion, and the linear regressions collapse, you can see here you got a buy on the 3 whites, and you got a buy on the white, red, yellow, and you could have taken a nice trade if you wanted to ride it. But something that I saw that you haven't mentioned, it's the white line crossing through the red, yellow, and green, because you've got the white, red, yellow. But you can see here the white almost tells you which way to trade. If once price gets above that thick white, you pretty much want to look to long, and then it's like if it gets below, then you want to look to short. I don't know if you use it that way or not. It's just something that I see. I wanted to check with you. before I did anything about it. And like I said, we can set up these indicators so we can look at multiple pairs at the same time rather than look at them on the charts. And then also the multimeter here, this is geared with the, I should probably change this name to red, yellow, green, because you can see here on this time frame it's gray, but if you go up to M15 you got a green, but on H4 and D1 and the month you've got the indicator telling you look for shorts, but on the weekly it says long. So I don't know if you like to go across multiple time frames or not, but that's just another thing I like to do, because maybe you might see something where if the M1 agrees with the uh, higher indicators, take the trade, and if you don't see that happening, you don't take the trade. And one other thing I like to mention, right here, I've noticed that your indicator works really well. The three whites, if the close is within 20 pips of the low, 20 pips or less, and the same thing if the close is within 20 pips of the high. So you can see here it was pretty much near the top, and then bam, it got knocked down, pushed away from that high. And that's basically what one of the rat zone trades, because we know, like the in this case the euro yen, uh, more often than not the distance from the candle body, top of the candle body to the high, the upper wick is greater than 20, and from the bottom of the candle body to the low is more than 20 pips on the daily candles. So that's one of the things I use statistics and to take advantage of. So F, I just wanted to say I really appreciate you taking the time to answer my questions, share your system, explain your system. I know sometimes it might seem like I'm not getting it, but I have to, if you don't answer in an if then else way, I have to extract what you say and try and decipher it and decode it and figure it out and put it in that format so then I can actually write the code. But like I said, I really do appreciate you taking the time. And fellow traders, just remember, it's not what you trade, it's how you trade it. The Rumpled One, signing off.